Herzlich willkommen, liebe Investoren, Spekulanten und Trader. Nick und ich werden uns heute über Gold, Nasdaq, S&P und natürlich den Bitcoin unterhalten, um auch ein Update zu geben über das letzte Video, was wir draußen haben. Ich verlinke es mit drin, die Vorhersagen waren ziemlich klasse, auch wenn ich selbst sage. Welcome, ladies and gentlemen, to, what is that, Nick? Is that a grey market talk we have here, or is it some impromptu thing? You tell me.
It's a grey market update. It's a GMT turned GMU.
Lovely. So we have a grey market update here with my fantabulous guest, Nick Themistocles, former superstar manager of 80 billion, I heard is the real number, right? Or is it more now? Something like that.
No. It can never be more.
Investment manager who pulled the trigger, made the asset allocation, knows what he's talking about, and on the positive side, which is forgotten too much, used to actually pull the trigger as one of the traders, as one of the guys in the screens when we were both younger and did the real cool stuff. You left in the evening, you didn't have any work to do. It was just your positions were clean, nothing to worry. I made that discovery when you fall up further in the chain. Nobody actually ever comes in your office, slaps you on the back and said, oh, that went great. You just get the shit handed to you all the time.
Well, in the old days, I actually remember we used to celebrate making money and we used to celebrate losing money. So we had some of our best evenings when we lost money, and they're to be forgotten in the end. We played hard and enjoyed it.
I always enjoyed at this time the triple witches when everybody was wearing. Did you have that? Oh yes, we had this discussion already about Pink Shirt Day. Every triple witches Thursday evening, everybody showed up in a pink shirt, and then the hangover on Friday at expiration was on the company's tab actually.
There was a story about yellow shirts. I won't go into it, but we used to, if there was somebody had a hole in it, we used to rip it off and put it on their sort of microphone. And, the good old days.
Anyway, you're not here to hear two old dudes reminiscing about their days behind the screens when we were much younger. We wanted to give you an update about, if you've seen the last video, our gray market talk, when Nick talked about Bitcoin, and obviously we deviated into other asset classes as well. That's now 11 days ago. I'm going to link it in the description anyway. We looked at Bitcoin, obviously we looked at gold, we looked at the Nasdaq and the big asset classes, and I thought it's time to give an update with the man himself, because he stopped me from losing money when I was too eager to already pull the trigger, and I'm just fascinated how well an area where I don't have the super expertise, or no expertise at all, let's be honest here, about Elliot Wave, seems to work, especially in markets where there are less fundamentals, Bitcoin, than in other markets. So we thought we'd dive in, derived out of, we have our virtual trading floor on Monday with our former students. And as it would have, expanded into a 3-hour session instead of a 1.5, I said, you know what, we're going to do a video and put that live out with the update, because it's very interesting, especially just to give the kicker in. You actually taught us how to look at when cycles change. We go to that into detail a little bit later, but that opens new perspectives. So where would you like to start, Nick? Shall we start with, we finished the last video on gold.
Gold, I think.
Start with gold today.
Gold and work backwards.
Yeah.
Okay.
Let's do it like this. So you have the screen if you want to open your charts.
Dangerous share the screen. Oh, that's already a...
There we go. We have the cycles.
Premature. Right. So I think here we are on gold.
Yep.
So the last video, we were where this pink arrow was. That was our Bitcoin video.
If everybody looks in the right corner now, I'll put the link in here right now.
So, yes, right. Good. Then, so this arrow marks the Bitcoin video, but as you say, we talked about a few other things, and the last thing we talk about is gold, but usually people don't stay to the end, so they missed it all. And if you didn't stay to the end, then you missed something really useful, because one of the things that I said on gold in that video was that gold was forming what looked like a triangle in this kind of so if I can highlight, I've never done that before, in this period here. So that down here looks like a triangle to me. And for that, hang on, See, I'm not very adept at this. So this looked like a triangle. And in a triangle has rules in Elliot Wave, and the rules are sort of a 5-wave pattern or 9-wave pattern. Go into that another day. A, B, C, D, E. And we were what looked like at forming E or finished E wasn't clear. But the beautiful thing about triangles is that it's a wonderful trade setup, a trade setup with a very low risk and high return. So this is one where when I used to be much younger and trading bunds in the good old days, it was one where I put a bigger bet on because here, this E wave, I said, look, if it breaks here, then it looks pretty ugly. But the kind of the no-brainer train is to buy it with a stop at this level C because, you know, there was like $7 or $8 worth of difference between point E here. I hope you can see that where I'm sort of moving my cursor to point C. And that's how triangles work. So triangles form this pattern. And then what we saw after that was what normally happens with triangles, slightly different for commodities, but we'll simplify it. What normally happens with triangles, they only occur in wave 4 and what's called wave B positions. And after 4 is always 5, and 5 is the end of something, right? So, so here, this wave 4 is finished. It was a triangle, and so we expect an explosive move higher. The normal target for a triangle is a minimum of 2,570, so that's done through measuring certain points of the triangle and then projecting forward. Commodities are a little bit special because commodities, the final wave in commodities is usually the most powerful. In stocks, it's normally the third wave, but in commodities, usually the final wave. So, you know, I'm tempted to say that's probably the minimum, and then might get a correction, and then this thing just carries on going up sort of much higher levels. You can see, you know, these I've just done those red lines here as placeholders, but that's the kind of path that we would expect. If this was a triangle. I mean, it could still be forming something else. It doesn't look like it's forming something else, but you know, you have to take a view sometimes on what these things are. And for sure, if that was a wave E, for sure it gave you a great opportunity, and for sure this thing has gone up and it hasn't even looked back. So and what that does is also support silver. It supports gold miners. And you know, and that's been a great trade, I must say. So, you know, hopefully for those who stayed around for the last video, understood that. If you didn't, stay around a bit longer next time.
Well, it's when two things come together, actually. If your wave count seems to have been accurate, at least for this time here, where you actually caught the low, what I liked about it is the risk-reward ratio. Yes, if you're
absolutely
wrong, you get stopped out. You can still reverse your position and play the other side. But as it is so tight, especially if you would leverage that up with an option trade, you would have a magnificent setup to say it will only cost me pennies if I'm wrong. But the rewards are potentially huge. And this is, especially for our beginners who are watching this is what trading or investing is all about. If you lose, and you're going to lose, you want to lose a little. But if you catch it right, then you want to ride the wave. And that was the perfect example. As I said, if I look into the viewer count, most people are watching a third of the video always. So everybody who struggled through the whole thing actually might have had potentially a good trade setup. We should ask our own students, Nick, whether they actually watch it to the end in the next virtual trading floor.
Yeah, okay. I mean, you know, it's funny because nobody actually mentioned gold in the video. So we had all the videos we had in between, but
well, they were all dazzled. They were all dazzled
by
Bitcoin, by the projections you made.
Yeah, I mean that's Bitcoin is always very spectacular. It can be at times, and you know, we can talk about that. But before we talk about that, you know, so we discussed now gold, and what the other sort of market that we talked about, which wasn't the main purpose of the last video, was Nasdaq, and I'm wondering where I'm going to put the chart up. I'm going to put up a chart of the Nasdaq futures. So hopefully this is the Nasdaq futures. Wonderful. It's in white. It's a very short time scale. Okay, very short time scale. But what you see overlaid here is in red is the yen. Okay, so the boxes are the times when the Japanese have intervened. Now, I've spoken before about regimes, and there are certain times when markets seem to correlate well and times when they don't correlate well. And I think what's going on in Japan is, very significant for other markets around the world. Up until now, you've seen, especially Japanese investors, because they've got the choice. They can invest in Japan, but it's, the population is kind of in decline. They haven't really been growing. They see great opportunities overseas, especially in America. Japanese government bonds were yielding next to nothing. Gradually, that's changing. And what's also changing is the fact that the yen has been collapsing. And it's sort of, they don't mind a steady fall in the yen. They kind of think it does well for their economy, helps their exporters and all of this stuff. There might be some geopolitics with China. But all of that aside, at the moment, at 160 on yen versus dollar, that's quite a dodgy thing for the yen. And the reason is because above 160, there's not much to protect the yen before you get to around 180 or, sort of this 180, 200 range. And when you lose control of your currency, things go bad. So you've got two things happening. All the Japanese, or a lot of the Japanese investors have been putting a large portion of their portfolios overseas. And the government are, they're in a bit of a pickle. So what would you expect to see? So firstly, we're seeing yields go up in JGBs and yields falling in US Treasuries. So that relationship, and I'm going to be, again, here we've got yields in JGBs in versus US in green, and in orange you've got the yen. Now, it's been a very, very good correlation in the past, yen and the spread of 10-year yields, and then it kind of, that relationship sort of fell apart in May this year. The yen started to weaken, despite the fact that the interest rate differential was collapsing. And, that put these guys in even more pressure because they thought, well, what else have we got to do? We put up interest rates and it doesn't protect the yen. Well, what do we need to do? And this is where I think, the hand of the government might well come into play here because there's a government pension investment fund, has 1.5 trillion of assets. They made 280 billion on foreign, on their sort of investment pool, and a lot of that is foreign assets. And they came out recently and said, we're going to reallocate for the first time in 5 years, do a major reallocation. And what that means is a lot of the stuff they've got overseas may well get repatriated into Japan. And that may well be sort of part of this sort of repatriation support of the yen and so on that we will see. So there will be phases when the government are intervening where actually you see some of these investment savings institutions also repatriating at the same time, selling their Nasdaq, selling their treasuries, selling their bunds, selling whatever it is, bringing it back to Japan. And as part of this sort of strategic reallocation of, so what you see here is in red, the yen has been falling, but at the same time, and this is the Nasdaq also taken a little bit of a hit. Now, as I say, these things could just be in short bursts, but you can take advantage of these things as a trader. And at that point there, I had two choices: do I go long the yen or short the Nasdaq? And I thought, well, the easiest thing to do is to short the Nasdaq. So I put that trade on. And for me, what does this mean? Where does this thing go? So we were talking about the Nasdaq, but obviously I think it's important regarding the yen. And here we're at a critical level. So this point here, wave B of this, what could be a triangle, don't know. This point here, wave B, is 20,275 on this is the Nasdaq future. And we are trading exactly here right now. if we were to break this level, it will be an overlap for me. Now, doesn't mean that it's going to collapse per se, and we might sort of start to put some Fibonacci points on here and say, okay, where is the next level of support? So the next level of support is about 20,000. So we're in a very important zone. And below that 20,000, we have to say, okay, then we're going to see most likely a much deeper correction in stocks. And where could that be? I mean, this is a far too bearish count in my view. But if we look at this, where might that correction come? Well, could go down to here, so that's sort of 19,400, or sort of a much stronger correction would be 17,000. I'm not one of these people, when you look at markets, say, okay, you know, it's going to go to the moon or it's going to collapse. So take each point at a time. The next support below that 20,040 level, I think, on the Fibonacci is down here at 19,004. So that's where we are on Nasdaq for me. And I think this whole macro thing with Japan may be playing a role in what's going on with some of the risk markets in the States. And I don't think it's, to do with geopolitics. I don't think it's to do with interest rates. I don't think it's to do with CPI or inflation or all of this stuff. I think there's some macro from overseas that is impacting all of this stuff. So that's my sort of thought on Nasdaq, and it kind of sort of fits in with the S&P as well. So again, just because I can count 5, I mean, there's a rule in Elliot. I mean, it basically says not a rule, it's a guideline. Just because you can count to 5 doesn't mean it's the end. Okay, and I can count to 5, and it might sort of continue to extend. So take that with a pinch of salt, but it does kind of fit with the way that I'm kind of looking at the S&P right now, where there might be some kind of ending pattern here, which corrects down to, well, what would be the target? It would be sort of the next fourth wave here, which is around 5,400. As I say, we take it one step at a time. We're not going to be too bold with predictions right now. So Nasdaq and S&P covered.
We had a look at the seasonalities the other week in our virtual trading floor. We actually are, driving into strong seasonality here for the markets, aren't we?
So
historically seen, because that was one of the big discussion points. We had to say, well, maybe this time, now I'm saying it, maybe this time it's different. Maybe we don't see the strongest seasonality here, but do the opposite, because we were already tricked and we expected a weaker market in March, April, and the opposite was true, looking or focusing on the seasonality. So that would be the counterpoint against a correction we see here, to say, no, nothing to see here. Move along, it could still go stronger. But my opinion, I'm bearish anyway, simply because of the high valuations of the magnificent seven, which don't make any sense. You see the charts coming around at the moment? They compared the Cisco at the peak with 5% of GDP in market valuation in the US versus, I think it's 9% in NVIDIA now. In shape of GDP. So we are very, very high up the valuation chain here. So yeah, you're talking my book right now with your potential correction if the count is right.
Yes, from a purely, again, we're only educational anyway. So on the Nasdaq, there are a couple of reverse Fibonacci levels here, which is sort of one thing you look for in Elliot Wave is a confluence of Fibonacci targets, and there are a couple here. There's a 300% Fibonacci ratio, which if I click this thing will tell me where it came from. Can't see it. Oh yeah, here it is. So this move here, when you have a correction, the target normally is between, if I say here, so the first target would be if you break 78% retracement of this, and the normal target would be 1.382, so 1.272 to 1.382, and beyond that, it's like 300%. So 300% actually comes in here. So very close to where we are here. These are never exact. This is sort of the range of where we are. And the next Fibonacci target is this thing, this 1.382 to 1.27 you see here. And that comes from this move down here. So the move down from November 21 to October 22, that Fibonacci target is, is where you get these 2 points here. So this range, I mean, it's sort of just poked its head above, okay, is that enough? I don't know is the answer to that question. But sort of it's kind of in that range, and therefore makes me think, could that be a reason to pause? Could be a reason to pause. It's not necessarily a reason to collapse, just a reason to pause. On the valuation thing, I'm still, a lot of these things I do buy and I don't buy, but the whole, now the breadth expanding, so small caps and all of this stuff happening in the States gives the valuations a lot more plausibility, because now they've got someone to sell their AI to, because suddenly you're building more of the fantasy in for productivity improvements amongst all companies, and this is not just an interest rate thing. So it extends the fantasy a little bit longer. I was a bit concerned when I saw small caps failing to sort of go up, because that means the only buyers of NVIDIA's chips are going to be Meta and Google and Microsoft, and you think, well, that's just past the parcel. That's not really enough to to sustain the kind of valuation you've got in NVIDIA. But anyway, I mean, that's where I come on the valuation thing, and I don't think the markets are particularly overextended.
Can I interrupt you here? Because I just looked it up while you were talking. In the last video, which I have linked in now, and you should really watch it, you came out with a crucial day on the wave count on the 15th of August related to Bitcoin.
Yes, I will now.
Guess when NVIDIA is reporting earnings?
Oh, really?
Yeah, and that wasn't made up the last time. I just checked it out and thought 15th of August is NVIDIA coming in with the earnings. By the way, I also looked at the chart. It's not 9% of GDP. It's over 11% of GDP.
Yeah, I mean, it is scary. I grant you, it is quite sort of, when you've got one company sort of doing it all, you really wonder, is everyone really buying their stuff? And that's why I was more concerned when it was very narrow, the rally. Now we're a little bit broader. I'm less concerned about it. I still don't believe in like the big crash until, as I say, sometime in 25. I still think the markets can move higher, and I still expect to see 6,000 on the S&P. But it's not a straight line. Yeah, I mean, these things, it's going to correct on the way up there. And the rationale for that is purely earnings. So if the S&P can drive earnings of $300 in 2026, or at least the forecast will be $300. You apply a 21 or 20 forward multiple in 2025 for the 2026, then you're at 6,000. So it's one of these unrealistic thing.
It's one of these things that went through my mind. Obviously, it was only a snapshot, but we saw CPI coming in much better than expected in terms of, yes, it's lower. And we saw PPI coming in worse than expected. I always like to lean back a little bit and say, okay, how would that look if I'm on an island where there's one company, a consumer and one company, and CPI goes down? In my book, on this very simple example, means the company who is selling the product, which is needed on this island, can't put the price increases to the consumer anymore. The consumer is not spending that. At the same time, the company which is providing this one product has input costs. These input costs have gone up. So where does the company then suffer in margins? And if it's a margin game, we will see that in the earnings. We will see that in the guidance coming in. And you just mentioned it. How can they monetize on this AI? Because I'm using it at the moment. I'm testing it, which is, it's quite scary, actually. I loaded up one of the articles I wrote a year ago or 2 years ago and said, hey, can you write me an article in my style about a topic? And AI said, or ChatGPT said, yeah, sure, I can do. So I uploaded it, smugly looking at the screen. In 3 seconds, there was an article, 1,500 words. And I looked at it and I thought, well, I've written that fucking well. Unbelievable. I didn't pay for it, Nick.
So, this is for you, that's a productivity improvement. Yeah. I mean, obviously, if we just churn out ChatGPT, then it kind of loses the thing, or does it, right? I don't mind if there's a little robot next to me that sort of doesn't look like me, but sort of knows what I know. because it kind of helps me do my stuff and focus on the things that are truly valuable. But in the meantime, you and I have to do lots of sort of time-consuming things, in that communication. If ChatGPT helps you, saves you time, that's a wonderful productivity increase for all of us that just sort of waste a lot of time, at the end of the day, on non-productive things. So I think that's, there is something to this. We haven't got sort of like the magic robot that sort of is going to be in the factory and sort all of the stuff out whilst everyone's on the golf course. But I do think, it's clear that we are all benefiting from these, language models and whatever else to help us work more productively.
Well, you and I are completely obsolete anyway, if I believe the feed I get on my Facebook account, because it shows me how the ChatGPT generated or AI generated stock and market recommendations have success rates of 98, 99, and even 100% sometimes. And everybody can become rich overnight by just listening to the large language models, what they predict in the market. So bad for us, Nick.
Well, I think good for us because we're entertaining, but bad for those chaps on the YouTube that just a salesman as opposed to knowledge people. So let's have a look at Bitcoin then. All right, we were talking about a cycle thing on Bitcoin. So maybe we'd have a look at the cycle first before we go to Bitcoin. And in our virtual trading floor, not this Monday, but the Monday before, I was kind of saying, yes, I know I said August, but there is a 182-day cycle, which is not the cycle I was talking about. It's a much shorter cycle, or a shorter, not much shorter cycle, that looks like it's turning. And this was the low. This was the time of our sort of virtual trading Monday, sort of a week ago. And then a few days later, you see this. I don't know if you can see where my cursor is.
Yeah, we see it.
Bottom. Okay. Again, this is stuff from the Foundation of Study of Cycles. Lars Fontaine, they do a great job at the foundation, and you should really. I'm not the expert they are, but I'm a user of their software and their products, and I try to sort of understand it as most people, and it fits very well with Elliot Wave. So Elliot Wave kind of gives you the pattern. This thing gives you the time, and so previously we'd looked at August. I'll show you again where that came from. But if we look at this sort of, this is an RSI thing. This thing at the bottom, this squiggly line is an RSI, but it's a cyclically adjusted RSI. It's based on the size or the length of the cycle that you're looking at right now. So this cyclically adjusted RSI has turned up as well. So not only do we have a low in the current cycle, the 182-day cycle, but we've also got a turn up in the cyclically adjusted RSI, which is a good thing, right? As far as cycles are concerned, it kind of is an indicator that something much bigger is happening here on the upside. Now, come back to the 192-day cycle. I'm sure you have to bear with me whilst I sort of recreate this thing. So what I'm doing now is I'm throwing in data which goes back to 2011, I think it does on this system. And I'm now going to load here. These are the sort of the top cycles. We can have a look at the longer cycles here. You can see that the longer cycles, 283 days, is still turning down. It hasn't formed a bottom. But I'm more interested in the 191-day cycle. Worry about that later. But look at the work and the papers from Lars Fontaine, German chap, very clever, basically, programmed all of this stuff with his team. And he came up with this sort of 535 pattern in terms of cycles, as opposed to Elliot Wave. Elliot Wave is also a 535 pattern, but cycles. And what he was basically saying is that, from the low, expect 5 positive cycles. So one positive cycle. So that was a low down here. Cycle 1 is this one. 200 days nominal cycle. We are 191. It's close enough. Cycle 2 is here. Cycle 3 is here. So cycle 3 peaked around, very close to the peak. And here we have sort of now, before we get to cycle 4, cycle 3 is, seeing a turn down, which means you got some headwind. Doesn't mean it collapses, but you got some headwind. And the low from this thing was around the, here it says 7th of August. So let's just say 7th of August is the low for this cycle. Now, that's where I was suggesting that when people were asking me, should I buy Bitcoin when we were up here? I said, well, no, I'd wait till kind of August, because August looks like the time. But from the evidence of the 182-day cycle, plus what I'm going to show you in Elliot Wave, it looks like we've done all we need to do, certainly in Elliot language, and we may start to see these longer-term cycles supporting the short-term cycles turning up. So the 191-day cycle is going to be turning up fairly soon. Then we've got the 283-day cycle, which looks like it's turning up soon. So all of this thing should provide some kind of tailwind for the markets. And again, I can show the cyclically adjusted RSI here. The cyclically adjusted, it's just poked its head above that lower bottom line. So again, with limited knowledge, and I'm not an expert, as I say, in cycles, looks like we might have a good signal in Bitcoin. So as we are Elliot Wave experts, all of us now.
Can I one second ask you something?
Go ahead.
Let me play the devil's advocate here. In the past, you could either trade Nasdaq or you could trade Bitcoin. Sometimes you didn't know what you were trading because they were going in the same direction. Very high correlation. We just made what I think a compelling case that we should see a correction in the Nasdaq.
Yes.
How does correlation break down in this case, or are we seeing now a Nasdaq correction which would actually form out and then also build a temporary low for the Nasdaq till the final move to the upside comes?
So that's a really good question, and I think I've got something in my correlation Bitcoin Nasdaq. I think I showed this last time. Not 100% sure, because we did have a question from somebody, one of our viewers, on correlation of Nasdaq Bitcoin. In orange, I've got here Coinbase, but we can ignore for the moment Coinbase. Here we've got the blue, we've got Nasdaq. Red, we've got Bitcoin. Coinbase in orange. Let's take Coinbase off so we don't confuse the charts. The bottom things down here are correlation measures of Bitcoin versus, the top one is versus Nasdaq, bottom one is versus, I think it was Coinbase. So yeah, it's been fairly close. You can see from the green here. I mean, I can't remember what sort of time period I've got here. I think it's 3-month time period. Been fairly well correlated, Nasdaq, Bitcoin. But what we said last time was that this red thing, which is Bitcoin, went down whilst the Nasdaq was going up. And you recall just a minute ago, I also said at the same time, the Nasdaq there was a breakdown in the correlation between the yen versus the interest rate differential, also around that time. There are obviously some other macro forces that we haven't quite figured out, but they do have their periods where they don't correlate, right? And this may well be the time when Bitcoin catches up and Nasdaq, catches up from the top and Bitcoin catches up from the bottom, and then they go in tandem again. I mean, we have to sort of, as I say, I'm not hugely bearish on markets. I still see upside, but some kind of correction period, we have had it before, low correlation here, low correlation here. Maybe this is another period of those low correlations, but it's kind of, I don't get phased when I see things not correlate. I do kind of try and explain it, but sometimes you just can't.
Timing wise, on the short term, that would actually mean if we look at the middle of August, 7th of August till 15th of August, it's still a month's time where you could have a temporary correction of the Nasdaq.
Yeah, absolutely. And you'll see, okay, so this is a chart of Bitcoin, an interpretation that I have. I will always have more than one interpretation for the markets. Let's look at this one. One of the kind of guidelines, not a rule, doesn't have to be, is that it should have the right look. And in order to have the right look, it needs to sort of be within a channel. In order to be within a channel, then roughly the lengths of wave 2 should be the length of wave 4 in time and sort of distance and stuff like this. So I would look for, and that's why, for example, I can't remember, is that the first one I did? Yeah. So here I've got a wave 2. You can see this box here. And you can see that when I drew the box up here, I was saying, okay, if that was the low down here, that would be a good wave 4, but that's not, it didn't happen. So potentially I had to sort of look for an alternative interpretation that came to this one. And then I said, okay, well, actually, the end of this box here, and those two boxes are the same length, the end of this box actually coincides with the first week of August, the August 9th, 10th, whatever, which fitted with the cycle thing, which kind of said to me, oh, we got two things now pointing to August. Surely, just wait. But I actually think what may well have happened is that, and for those of you who know me, I don't listen to the news. I don't care about the news. I don't try and explain market movements like the newspapers do. For me, it's these are just narratives and they're confusing. But I actually think, with cycle, as this was a cycle issue, I've heard before, and as I say, I'm not an expert on this thing, that it could affect the timing of the end of a cycle, and it could bring forward a cycle or extend a cycle. Bringing forward a cycle was COVID. They were looking for a low, but not that soon. It was supposed to happen in September, not in March. And so, it's possible that these news events could impact these cycles, not Elliott Wave. So, and in this respect, it could well be that August timing has just been brought forward because, and why you asked me earlier, you said, sorry, I don't get it, Trump, Bitcoin, what's that got to do with it? Trump has come out as a big supporter of crypto, at least the crypto community believes so. He's been seen, with crypto guys who are evangelizing, the sector, evangelizing why America needs crypto. They need to be leading the crypto world. Whereas the current administration, the crypto community have had a lot of headwind, with the SEC, of course, but also a lot of senators anti-crypto. And if you've got your president and your vice president and, the rest of Trump's crew, and you've got a high probability of him now, thanks to the 2 centimeters that saved the world, that, this may well be a good reason, another reason why this thing was a low. And I'm just going to show you one more before I sort of rabbit on about, crypto and all of this stuff, and is to show you an Elliott Wave chart so one of the things, so if I was sort of for my students, corrections, if this thing was a correction, right? One of the other ways when a correction is over is when the correction leaves a parallel channel. When it leaves a parallel channel, then you get what's called third wave price action. And you can see that this correction phase here that we had where I, incorrectly said, hold your horses, August, it'd be fine and, don't worry about it. But we had enough indicators, as I said, with a 182-day cycle, this cyclically adjusted RSI, but also you've had this breakout of this.
Well, you weren't wrong. If I would have bought the 60, even though I'm right now, I would have been stopped out in the meantime.
Yes, absolutely. And I know, because I also sort of see a lot of players out there that were long of Bitcoin because, again, they incorrectly viewed this move up here as a break. From an Elliott perspective, it's not, right? That's a 3-wave move. It's clearly a 3-wave move. And anyone who does Elliott knows that 3 waves is bad going down. So, and obviously these people have stopped out and now they're buying it up here again. So, they pay their thing. But if you focus on this thing every day, there are some signals early on. One was that cycle thing that triggered, when we were just below the 60,000, I think it was, and this one, which has kind of broken on the upside here, which gives me more confidence that the probability that this correction down here is over increases. And, this box that I drew, I mean, actually, it's also still quite amazing. The box is very similar, and I've kept the size of the box. And look, it poked its little head just below the bottom of that box. Who was that? Who shall we blame for that? Well,
Saxony.
I didn't want to say because I'm not German, but it was, of course. If it was smart money selling that, I think a lot of people would have been in fear. But we know that it was done, not by the investment side of the government. It was done by the I think the Bundeskriminal. They are obliged to sell assets if they believe there's going to be a deterioration in the value of confiscated assets. They're obliged under the law to do that. So they were sort of doing this stuff for administrative purposes rather than a view on the market. And so, it poked his little head after they finished their stuff. Mark said, right, we buy this stuff. We take it. And there is continued flows, it seems, into the ETF. And I think there was this phase here where Bitcoin holders were getting a bit frustrated. They bought the ETFs. It didn't really go anywhere. So they liquidated, and now I think smart money has definitely come into this thing, and certainly there's been a lot more flow. There must have been in order to absorb, a big one-time seller in a very small time window.
We could call that the Gordon Brown moment. You remember that?
I do remember that.
Most likely not. We were already not young anymore at the time. That was the summer of 2001. When Gordon Brown sold the Bank of England's gold at around 250, something. Yeah,
so I don't know. I would guess it's around 400 because, but yeah, somewhere between 250 and 400 would not surprise me. And of course, now this gold is worth 10 times, that 250 level. It's now 2,500. And when government officials take action, you really wonder what they're doing and who's advising them. But anyway, so such is life. So that's really the story, I think, on this whole Bitcoin thing. And if we have seen the low, yeah, and what else would I look for, as part of an Elliot Wave Analyst? So I would say, okay, let's just say this is kind of a wave 1, wave 2, we're going to do wave 3. Where is resistance? And you can see the resistance band here between the 78% and 61% levels, and that's between 64,000, which we've just gone above, to 67,500. Those are the two kind of key, well, that's the band of resistance. And so I expect the 78.6% to hold prices for a while. And it may give people an opportunity to have a look at this thing again at lower levels. And I'm just sort of looking back here. Was there a lot of price action in this level? Yeah. I mean, if you can look back here, I mean, this whole sort of area between 60 and 70, there's a lot of stuff going on. So you can imagine there's some, heavy price action, but it will be strong resistance. But if it breaks that, if it does break that, then basically expect, so I've got these as reverse Fibonacci targets, expect a target at least to the 127.2 to 138, which is, the next level, 77 to 80,000. And at minimum targets, I mean, my end targets are slightly higher. That's where we are.
So the shifting of you can switch it off, then we have a little bit more real estate. Because the big orange elephant in the room we haven't talked about it is obviously the assassination attempt on Trump, which fortunately didn't work out. And I was waiting. We had this conversation when everybody sees what's going on in the economy. It's this, where's the catalyst? Huh? And I think we slipped a very tiny sliver away from having our catalyst in a bad way. That happened. However, having said that, we now had the catalyst test. Let's call it this way. Trump has survived. Maybe the whole temperature gets dialed down a little bit. They talk about factual stuff now. Biden will stay in the race, which did I not predicted. I thought he wouldn't survive last weekend, but hey, how things have developed. So the catalyst has been almost on the table. A market has realized that, and that would explain why we now see this shift in US cycles to say, okay, fine, we're coming a little bit forward. We have taken uncertainty out of the market, at least in a bit, if Trump will win this election. Markets love, love not security, but love predictability in a way. The one thing I thought to myself for a very short-term trader, what do you do nowadays then before a weekend? You hedge, right? I wouldn't go without a sidearm into the weekend now. Most election shenanigans will go on there. Yeah. What's next? Is Biden protected well? Yeah. Would we?
Yeah, I mean, true, absolutely true. But there is now serious security for Trump and also for Robert Kennedy, and that's a good thing. And as I say, I think that was the 2 centimeters that kind of saved the world, because I tend to believe, it's sort of this political bit, but the world is probably safer with Trump than without Trump, even though that's probably not the popular opinion here in Europe.
Well, we discussed that as well on the virtual trading floor. What's the Trump trade? We're not going into that now, but then I asked, what's the Biden trade?
They're all this. They are nuanced. Both of them have their nuances, but so very quickly, Trump would rather put 2,000 quid, dollars to everybody's pocket. He'd rather sort of forgive student loans. Trump would give the money in a different direction. He'll give it through different types of tax cuts. Both would almost certainly renew the tax cuts that expire next year. They will both extend them. So but they're nuanced. They're both going to spend money, and therefore, what continues, in my view, is still the idea that the Federal Reserve have got to kind of step in, lest the world be how do we say, cash being diverted to the government and not to markets.
Well, there was a nice comment earlier on Twitter. Somebody wrote, so apparently it looks as if Trump is not sending SEAL Team 6 in to remove Powell from his position, that he'll keep on until 25.
You remember also that the other nuance is a dollar focus. So I mean, but they both seem to prefer a weaker dollar. So Janet Yellen helped weaken the dollar when it was sort of trading at 110 to 115 range. And Trump has clearly wants to strengthen America's exports by weakening the dollar. So that's there's a lot of overlap between the two.
Well, let's keep it there. A terrific show today, Nick. I hope everybody in the future will stay to the end when we get through all our deliberations.
It's true.
It might be helpful.
That'd be a lesson.
Yeah, absolutely. Let's keep it on. So we've got our long-term predictions, short-term predictions, and the technique behind it, risk-reward relationship. Yeah, risk a little, reward yourself with a lot, if possible. And follow the guidance, stick with your plan. We can adjust the plan. That's what we're doing on the fly all the time. Anyway, if who was it? John Maynard Keynes said once, if the data changed, I changed my opinion. So far, we didn't have to change a lot. Let's brag a little bit about it. But
since May last year, I think we've been on a good track.
Yes, I appreciate that very much. Any last words from your side, Nick?
I'm going to go and pick up my Mini, which is at the garage. Not that anyone cares.
I used to have one. When I moved to England, I bought a really banged up old little Mini. Or I told the lady who I was renting the house from, said, could you buy a Mini for me? And she was full-time service at the time because they wanted me in London, blah, blah, blah. So she bought me a little Mini. I think I spent £2,000 or something like that. And I met her at the train station. And I thought, great. I'd never driven a car with the steering wheel on the wrong side. Also, the clutch is on the other side. So I jumped in the car and everything worked fine. And we drove up the street. It was about 750 meters or 500 yards or whatever. And she said to me, and now, Thorsten, you can actually change the side of the road. So I was still driving the German way. I thought, oops. No, I love a Mini. Nick, thank you very much for your time. It's awful predictions for some of the markets we have seen here. Nasdaq.
You got out of that pretty well. It was all you said is awful. So.
Yeah, well, in a way, you know, I like stocks going up. I like markets going up in general. It's a positive mood for everything, but on the trading side, I still have this. I should really stop with that, trying to pick the top to short the shit.
This is, you know, we need to talk.
Yeah, absolutely. I'll get a mindset coaching from you.
Good.
Thank you very much. Thank you very much for watching, and hopefully see you soon on this channel. Bye-bye.
Bye-bye.